see the sun, I'm rising up, I feel the love now. Oh, it's in my vision. Didn't know I ran around and I got lost, but now I found it. Well, I can't shake this feeling. Oh, it's gonna take me a little while just to get my head around this moment. But I can see the sun, I'm rising up, I feel the love now. Oh, it's in my vision. And it's telling me run, 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 run. Run, 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 and don't give up. And it's telling me run, 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 run. Run, 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 and don't give up.
Welcome to the Retirement Learning Lab, where we teach you how to retire without running out of money. My name is Van Richards, and this is the daily NASDAQ Stock Update. Thank you for joining today. We have two really good stocks to talk about today. We're going to talk about Lululemon and Marriott. And as I'm talking to you about these different stocks, I want you to think for just a minute, the way that I'm portraying them is the way that I talk to clients about how assets should be put into their portfolios for retirement, or how things should not be put in their portfolio for retirement. Now, I can't give you listening today a direct recommendation, but I can show you how I go about this. And if you use some of the information that I have today, you don't have to contact me to use it. You can just do with it what you like from that standpoint. I think that's great. I'm glad to be able to educate you and help you out just a little bit with the stocks that we're talking about today. As we talk about these different stocks, I want you to understand that we're heading towards building a portfolio for retirement. And when people are retiring, they really only use stocks for three different reasons. Number one is they're going to use it for growth. I've talked about this before. If you've never joined before, hey, thanks for joining us today. And I'll tell you that the first reason that people use stocks for retirement is going to be growth. If you're going to be retired, if you're younger, below 60 from that standpoint, you've got a long time to go. If you're, let's say, 60 and above, if you still have years to go before you actually use all your money, let's say, nobody has an expiration date put on. You can't turn yourself over and look on your bottom and say, hey, here's your expiration date. That's not going to happen, but you need to strategize so that you should be intent on living a long and happy retirement. So if you retire in your 60s, or if you keep working, at some point in time, we're all going to have to stop working because the body that God gave to us isn't going to last forever. So the idea is with growth, that's where I'm going with this conversation, is that growth is going to be for 10, 20, 30 years down the road. Yes, if you're retired, you should be thinking about, what am I going to do when I get to be 80 or 90 or even 100? Some of you may be saying, I'm not going to live to be 100. How do you know that? I know that there are some circumstances, but don't cut yourself short from that standpoint. Plan on living a long and happy retirement. Okay, so as we talk about the stocks today, there's three different things that we look at with stocks. Number one is we look at the earnings of stocks. Number two is we look at the stability of the company. And then number three, we look at how they compete. So let's get right into it and get started and talk about Lululemon. Let me make the screen just a little bit bigger so you can see everything that's going to go on from that standpoint. This is just a little explanation of what that company is, because I know that some of you know what Lululemon is and how the company works, but some of you don't. So for those of you that don't know, here's a little information on that company. So if we finish that out, you can see that Lululemon was off 2.2% for the day. It's not a cheap stock, $303.53 a share. And let's take a look and see what's happened over the past year with this stock, because this stock's actually been gangbusters. It's done really well. At $193.50 1 year ago today, it closed at $303.11, and that's up 55.78%. That's really awesome from that standpoint. Now, okay, so the stock is off 2.22% today. Now, if I was having a conversation with you about whether that you should buy or sell this, I think that it would be a very short conversation, because I would tell you, if you've owned this stock for a year and it lost 2% in a day, that's okay. It's just letting off a little bit of steam from that standpoint. Now, if you follow the dancing cursor, you can see that back at the beginning of September, we've had a decline in this stock. One of the reasons why that we've seen a decline in Lululemon recently is because it had a big run up in the past couple of months. Now, the stay-at-home phenomena because of the coronavirus pandemic has made the idea of leisure wear, athleisure wear, and athletic wear more popular. How many people do you know that have a Zoom shirt? Hello, you're gonna do a meeting. So okay, I'm telling you what, I won't stand up and show you today, but I'm wearing a suit, but I got shorts on below. So the idea is that, yeah, when you're doing things online, you want to make sure that you're looking good from the top up at least, okay? And that's what Lululemon is continuing to help people do, not only just with the athleisure wear. Now, it's just not, if you've ever been into a Lululemon store, you know that the focus of the store is really women's athletic wear. But hey, they have a lot of men's athletic wear. They have now men's casual wear too. You saw the athleisure video that was previous. They sell just plain shirts that are really pretty nice. They're not the cheapest in the world. They are premium products, so they do have a little bit higher price, and they're very popular from that standpoint. They have their own stores. They do not own their own factories. Most of the production is done in Asia, so they're independent producers or manufacturers in Asia, but they have some good direction going forward. So let's keep going on. I don't want to stammer on that too much. The other thing that we look at when we look at stocks is we look at the earnings, and that's real important. If you look at the chart that you see in front of you, you can see that, in the second quarter, previous to that, from the fourth quarter forward, we had the coronavirus market crash. People weren't buying things as much. And what we've seen with Lululemon is they have actually shifted a lot of their business to e-commerce, and that's one of their business focuses. We're going to talk about that when we talk about the moat of the company in just a moment. But every single quarter, they have exceeded the estimates on earnings. And even during the pandemic, they've done very well from that standpoint. Now, they don't pay a dividend, so we're not going to ponder on that very long. How do they compete against other companies that are out there? So when we look at Lululemon, who are their competitions? Nike is, of course, but Nike's going to be a little bit different because Nike is going to be more diversified. Also, the market for Nike is going to be, I won't say bargain basement, but you can get a lot of Nike stuff at a lower price. Plus, Nike does have the much higher price athletic wear too. They have shoes, which Lululemon does not have shoes that I know of. Forgive me if they do. There's also Under Armour that's out there, and VF Corporation. You may know them as Timberland, Vans, those different types of products. So when we look at how Lululemon has competed with its peers, they've done actually pretty good. So if you follow the dancing cursor, you can actually see that they've done very well. Now, there's a comparison that I want to draw for you. Oh, one more thing. Remember, the past performance is not a guarantee of future results, but let's keep going on. Oh, I want to talk about this for just a minute. Hold on just 1 second. Let me get this. Lululemon and Peloton. Yeah, they're separate companies, but there's a benefit to Peloton being so popular. Now, you might think, okay, all the people who are doing Peloton, they want to make sure that they're styling and they got great clothes to work out with. So Lululemon is a natural fit. Yes, that is part of the connection between Peloton and Lululemon. But Lululemon is going to start to compete with Peloton. And how are they going to do that? They purchased a company which is called Mirror, and you've probably seen it. It's basically it's a mechanism that it's a workout aid in essence, and it'll help you go through workouts. Go to and look up the Mirror on the web, and you'll see what I mean from that standpoint. But Peloton and Mirror are in direct competition for each other. And this is a good thing for Lululemon because they are expanding their market. They're diversifying from that standpoint. And actually, when we talk about expanding the market, that's one of the reasons why that it gives this company a narrow moat. Now, when we talk about the moat to a company, if you've never joined me before, this is what a moat is. The moat is the imaginary barrier that a company digs between them and their competition. And when you have a wide moat, you've got a big advantage. When you have no moat, you have no advantage. But when we look at the moat that exists with Lululemon, they have a narrow moat. And there are some competitors out there that they don't have any moat in between them and their competition at all. But Lululemon stands out in the apparel manufacturing, apparel market to actually set itself apart. They have a niche which they've created for women's clothing, for yoga and workout. They also have a customer connection. They have different events that they hold in their stores and in connection with athletics, and they have yoga, the connection to that too. The other thing is that they have, in 2019, they put out a plan, which was a 5-year plan, which was called the Power of 3. And this is their goal. They have product innovation, which they are doing. They have new materials that they're introducing and new different products that they're introducing. Number 2 is going to be the e-commerce that they are expanding significantly. And the coronavirus pandemic has actually propelled that forward and pushed that effort forward more, and we're seeing more e-commerce go on with Lululemon. And market expansion is going to be aided by acquisitions like Mirror, because Mirror is going to be a natural connection. If you're doing a workout with a group or individually with Mirror, you're going to be wearing something like Lululemon athletic wear. So that gives them a definite edge and gives them a moat in between their competition. Now, when we talk about EBITDA, I've talked about this before. This is not a foreign singer. Hey, EBITDA is earnings before interest, taxes, depreciation, and amortization. Now, why do I bring that up? Because the fair market value of this stock, that's actually what analysts say that it's really worth, is based on EBITDA. And what Morningstar, which is the analyst company that I'm referring to, they've calculated it based on 19 times EBITDA and also a price earnings ratio of 34. So with that said, we look at the current value at 303.11, and we have a day of value that they've pegged, which was the 19 times earnings, at 145. Now, forgive me, the yellow number is off just a little bit, but that's pretty close to what it ended for today. But the idea is that they are trading at a discount below actually what they are selling for. Now, that's wrong. Okay. Let me tell you what I have to go through from this standpoint. All right. I'm going to go backwards for just a moment if I could. All right. We have the EBITDA. Bear with me, folks. I'm going to get back up here for just a minute because I want to bring that number back up that I just talked about. All righty. Hold on. All right. Thank you for bearing with me for just a moment because I want to make sure that I'm getting to the right number for you from this standpoint. All right. We looked at the value today at 303.11. The fair market value is going to be much less than that. So it's actually trading at a premium from that standpoint. So I'm going to hit the escape button just for a minute, and I'm going to go back down to where I was so that I can get back on track. All right. So it's not trading at a discount. It's actually trading at a premium. I apologize for that. Little technical difficulty that goes on every once in a while. Okay, so the point is going to be that they're trading over top of their fair market value, so that should actually not be a discount, it should actually be a premium. So I want to make sure that I get that. But the thing is that they are trading as a one-star company in itself. Now, let's look at what other analysts are saying about Lululemon. What they're saying is, when we went to 29 different analysts and asked them, what's your recommendation on Lululemon? 17 of them said that it was a strong buy. And then 2 of them said that it was a moderate buy. And then 10 of them said that it was a hold. Now, when we average all that out, what does it come out to be? It comes out to be this. So this is actually, when you average everything out, it's actually a strong buy, even though that it's a 1-star rated company. Now, that's a really important thing to remember. We're going to talk about Marriott here in just a moment, and it's rated as a 3-star company. Now, a lot of you, when you do the review of your own investments, let's say that you're looking at your 401k at work, and you look up a fund that you have, and you say, okay, I have a 4-star fund. You're thinking that's a great fund. Okay, it may be, but the star system for stocks is just a little bit different. The star system for stocks is based on the fair market value. It's really clear cut from that standpoint. So if we're looking at a stock like Lululemon and we say that it's 1 star, that doesn't mean that it's bad. It just means that it's overpriced over top of its fair value just a little bit. It's still a stock that we would look at and think of the momentum that's going on with people buying the product and say, yeah, this is probably something that we would want to have in our portfolio. And if I was sitting down with a client and we were putting together a portfolio of the NASDAQ 100, that's the 100 stocks that are in the NASDAQ, the top 100, I would probably say to them, yeah, I think Lululemon is a good stock to keep in here because it has the momentum going forward of what we're seeing in the economy. Now, the next stock is going to be a little bit different. Just remember, a 1-star does not mean it's a bad stock. It just means that it's a little bit overpriced from that standpoint. Okay, so let's keep going on. But I want to remind you, hey, this is not a buy-sell recommendation. This is just some suggestions on how that you can strategize putting this into your portfolio. If you want to get more direct information and you want to get a direct recommendation from me, I'm glad to do that. If you'd like to talk to me about your portfolio, go over to my website at richardsfinancialplanning.com and look for the teal button, and you can set up a time where we can have a telephone conversation for free. Just go over there and do that whenever you want. Wait until we get done today. I think you'll get some more information, which is really good. So let's get on into it and talk about Marriott International. Yeah, Marriott International got bumped 3.14% down today. But I want to take a look a little bit deeper at Marriott. Marriott, it's a hotel chain, but it's just not one type of hotel. You may be, if I say Marriott, you're thinking of the last Marriott that you either stayed in or you went by or you went to a reception in or whatever the case is going to be. But it's more than that. Look at the screen for just a minute, because what you see is that they have 1.4 million rooms and 30 different brands. This is a big company, $33.86 billion in capitalization. 10% of their rooms are luxury rooms. 45% are going to be full service. 44% are going to be limited service. And then a small portion, 2% are going to be timeshares. So they are pretty well diversified across the universe. And I really think that what we're going to see with a big company like Marriott is they're just waiting out the pandemic. They're not going anywhere from that standpoint. They are down in earnings, but you're going to see that is not something that's historical. When will it come back? I don't know. It depends on when this living hell ends of a pandemic. But at some point, and even if you listened to Dr. Fauci yesterday, he said at some point, COVID-19 is going to end. And his prediction was more toward the end of 2021, maybe sooner, maybe later, who knows. But the idea is with a company like Marriott, it's not going anywhere. All right, let's look at how they compete and where they went over the past year. A year ago, nobody was thinking about the coronavirus at all. The price of the stock was trading at $129.70 a share, and it ended today at $104.38. They still have not recovered from the crash between February and March when the market just went crazy. It's still down 19.52%. Now, nobody likes it to be down, but that's the way it goes right now. No dividends. But if we look at the earnings, now I want you to look really, really close at this because there's two sides of this coin. If you're somebody that's out there and you're thinking, I'm holding this for 20 years from now, then you've got time to wait it out. You would probably not be selling this particular stock. If you are going to utilize money that you have in this stock in a sooner time period, maybe the next 5 years, maybe the next 10 years, you may think twice about holding this stock. You might think, well, okay, maybe there's something better that will do better than this stock in the interim from that standpoint. And that's an approach to take. But when we look at what happens with the earnings over the past year or longer, let's look back a little bit. This was 2014. Remember, if you've looked at this with me before, and if you haven't, let me guide you just a little bit. The solid line is the actual earnings per share. Now, the earnings per share is the profit that the company is actually making. Now, the earnings per share, as you go through every single quarter, Marriott has been really good, even back in 2017, 2018. 2018 was a very good year for them. They beat earnings estimates quite a bit. Then we had the coronavirus market crash. Things went down and they went underneath what their estimated earnings were because nobody was traveling. People are still not traveling. Some are, but some aren't. When you looked at the different types of hotels that they have, those that are more budget friendly are being utilized first right now because those are the people that are having to travel. When we look at luxury is not being utilized quite as much. There are some people, and I do have a dear client that went on a Mexican vacation. Hey, Rick, hope you had a good time. Yeah, there's some people out there that are going ahead and traveling, and if you feel comfortable with it, go for it. Southwest is still maintaining their middle seat open, I think through the end of the year, actually. So they're trying to keep safety in mind. So traveling is still something that the industry is encouraging. Some people just aren't quite comfortable with it yet. So you may be sitting there going, ain't no way I'm going. You may also be sitting there saying, yes, I'm going to go. I'm not going to put my life on hold. It's up to you. It's a free country, and how you want to run your life is up to you. When we look at this particular stock, though, we want to look at what the mentality of the average traveler is going to be. And most of them are putting off travel for whatever reason from that standpoint and how they're viewing it. So this stock probably is not going to come back for maybe the next year or two. Should you sell it? Depends on when you're going to be using the money or not. If you're going to be using the money in the near term, it might not be a smart idea to hold on to it. Should you buy more of it? Well, that depends on whether that you think that this is a buying opportunity. I want to read to you what an analyst has written in the Motley Fool, and this is actually Lawrence Rothman, who is a Motley Fool writer. And he wrote this. He said, if this were merely a cyclical downturn, the stock market would present an opportunity for investors willing to wait out the storm. But with so much uncertainty created by the pandemic and the effect on travel, along with potentially permanent changes to business trips as companies continue adapting technology, you should sit on the sidelines for now until the picture becomes clearer. Now, that's one person's opinion. So should you sell it or should you buy it? Again, we go back to the question of when are you going to use the money and how are you visualizing this particular stock in your portfolio? Now, I want to ask you this question too. If you're an indexer, if you're a person out there that owns index funds and you say, hey, it doesn't matter, I own an index fund, and you own the NASDAQ 100. Let's say that you own, there's a ETF out there called QQQ, and it's just the NASDAQ 100. Why would you want to hold stocks that you have a pretty good feeling aren't going to be profitable? We talked about one of those stocks yesterday with Liberty Global, and I'm not saying it's a bad stock. It's off today too, but there are circumstances when we look at these stocks and we think of the three things that I always tell you that you should look at. You should look at the earnings. If a company doesn't have earnings, then the value, the stock value, is a mirage. Then we look at the stability. What type of competition can they hold out against? And then number three, we have to look at how they compete with other companies that are in their market. When we look at those three things, if you can say without a doubt and without emotion, yes, it fits every last one of those, then my opinion is that people should add those to their portfolio if they're looking for growth. If you're not looking for growth, you may be listening to this and going, I'm not buying a stock for nothing. And if that's you, that's okay. I have some of you as clients. That's okay. Look, some people, they just don't like the volatility of the stock market, and they have more fixed accounts, bond ladders, annuities, things like that. That's perfectly okay. But if you're one of those people that want growth in your portfolio, then this is a strategy to utilize. Get rid of the companies that you don't think are going to be profitable in the foreseeable future and put in more of the companies that you think are going to be profitable. In the notes to this video, you're going to see a video link that I put in there that's called How to Invest During a Recession. And I made that. It's actually a private video. It's not available on my YouTube website. So if you want to see that, that gives you some recommendations that I'm telling people to look at different sectors and consider these sectors as areas that you might want to either get away from or others that you want to go toward during this coronavirus pandemic recession. And actually, if you look at it technically, in the economy, we are still in a recession. But when we look at it from the standpoint of the stock market, we're actually in another bull market at this point in time. But that's another story for another day. So I hope that I've been able to give you some good information. Also in the notes to today, I put a couple of other different links of information that might be helpful to you. There is a link in there to Lululemon's most recent quarterly earnings report. There's also a link to Marriott's most recent quarterly update as well. I also put a couple links in there to videos that I have made previously about market indexing and how to use the strategies that I'm talking about to create a portfolio using a technique called direct indexing, direct market indexing. I think that index funds are great. I think that there's a place also for managed funds, but I think that direct indexing has an edge over many of them because, well, you'll go look at the video or read the blog that I put on my website. Speaking of my website, I want to make this recommendation to you if I can get this thing to go forward. Come on. Oh, I'm sorry. We sit here and click the wrong button. Okay, how does this company compare? Almost forgot about this. Let's get through this real quick. I didn't ponder on this a lot because Marriott's not that much different from the other companies that are out there. Choice Hotels, Wyndham, Intercontinental, they're all basically suffering about the same. Choice Hotels has come back just a little bit more, but you're going to see that Marriott is probably right in there with them. They haven't come back quite as much because of the type of area that they have. If you're thinking of buying hotel stocks, you might want to look at one of the other ones rather than looking at Marriott, but that's not a recommendation. I don't want to say, hey, you should not buy this stock or you should buy this stock. I can't do that. I have to look at your particular situation first, and then we can say yes or no from that standpoint. Okay. Remember, the past performance is not going to be a guarantee of the future results. Let me talk about the moat of this company too, because the moat, yeah, they do actually have a narrow moat, but basically because of the brand recognition. There's a lot of people that have loyalty towards Marriott, and they also have a strong reputation in property management. That's something that's going on with them very well too. Now, the current value closed today at 104.38. We talked about that. The fair market value based on EBITDA, which we talked about a little bit earlier, gives them a discount of 9.24%. Now, this is kind of confusing because you think this is a 3-star fund where Lululemon's only listed as a 1-star. Does that mean that Lululemon is worse of a stock than Marriott? No, it really doesn't. It only looks at the value, the fair market value based on the earnings per share, and EBITDA puts in a little bit more calculation, but not to bore you with it. But the idea is it's based on value, not on they have great rooms. You could be a 4-star hotel or a 5-star hotel. Not the same thing. It's based on value. Okay, what do the analysts say about this stock? This is a little different because we got 16 analysts that were polled, and we saw that 5 of them are actually saying they're flying the flag of buying it strongly, but then the majority of them are saying that this stock is a hold. So on average, what's that telling you? I'm going to say this. Okay, now this is a contradiction. I'm going to say that I would put a hold on this stock. But when you average out what the analysts are saying, they're saying this is a moderate buy. But when we look at the number of analysts, we got 1 that's saying it's a strong sell. We've got 10 that's saying that it's holding, and we got 5 that's saying that it's a strong buy. I would say that it's more of a hold. But when you average the numbers out with this crazy calculation, it says that it's actually a moderate buy. But remember, this is not a buy-sell recommendation directly for you. This is a conversation that you and I are having about a strategy of accumulating money for retirement. And that's the whole idea behind the show that I do. When I start out, I say to you that the idea of the show is going to be that we help you to accumulate money and to put together a strategy so that you won't run out of money during retirement. And that's truly the objective of everything that I'm talking about. When I'm talking about the different stocks that I'm talking about, I want to suggest to you to look at it and look at the 3 things that I talk about. Look at the earnings, look at the stability, and look at the competitiveness of each of these stocks, and then see how it should fit into your portfolio. Also, you have to look at it rationally and ask yourself, how would this stock possibly do in the intermediate term? This is not a show that's going to teach you how to be day trading. I don't think that that's probably the best route for most people. Most people end up losing in day trading. That's a story for another day. But the idea is stocks are a strong way to accumulate money. If you use mutual funds or ETFs, yes, those are other strategies, and I do use those strategies with clients. But I want to communicate to you the way that I am discussing these different stocks is the way that we discuss the different investments that people have in their portfolios. I give concrete strategies for this should be included in your retirement. This should not be included in your retirement. And with those particular strategies, if you use those strategies, then you can have a portfolio that will last you for the rest of your life. And you can put together a strategy where you won't run out of money. Okay. With all that said, I want to do one more thing, and that is basically to encourage you to go over to my website and sign up for a time to talk to me about your portfolio. richardsfinancialplanning.com. And if you click on the teal button, you can find a time where you and I can have a telephone conversation. If you'd rather do a Zoom conversation, that's up to you. And I would be glad to talk to you about whatever investing or retirement strategies that you have in mind. And if there's a basis for us to do more business together, that's great. If there's not, then I'll just say thank you for calling, and you'll go your way and I'll go on to the next day of broadcast. Okay, I have an important disclosure which is coming up after this. I put it at the end of every show because it does give you a little bit more of an understanding of what this show is about. So if you would pause it and read it, if you want to read about the disclosures that I follow here. So without that, with nothing else to be said, I'll follow you up with you tomorrow, and have a great day.